Welcome back to Everything Money. It's Seth, Paul, and Mo. We're always here jamming the jam boards and looking at the financial data for you. We love our patrons and people all over the world who supported our channel. It's incredible to have you again for another video. In this video, we're going to talk about an exit strategy. When do you sell? I said double when. When do you sell a stock, Paul? Our patrons ask this all the time. New investors, older investors. It's a very difficult topic. When do I get out of a stock? Which would lead me to how do we value stocks in terms of their tickers? Give us some insight on your thought process of not so much getting in, but when do we get out if the stock's going good or if the stock's going bad, which might be the case for a lot of our new users and viewers. Go ahead, Paul.
Okay, so there are multiple ways, of course, to sell a stock. We have the value way. You have just the Warren Buffett way of I'm going to find a good company at a good price and hold it forever. Or you have things like chart reading with Mo.
Yep.
When Mo's doing his chart reading, we'll get to him soon. He'll show you when he looks at stocks and when he sells them and buys them, okay? For my method, what I like to do personally is I look for stocks that I perceive to be undervalued. Then I use our software to determine what I think the value is. And I keep looking at it. As it goes up in price, I see if my stock price has changed due to new information. For example, I buy a company at 50, I think it's worth 80. It gets to 70 and they report new earnings and I'm like, oh my God, these new earnings are better. It's probably worth $95 a share. I'm not gonna sell it at 80 anymore. But it's always about reassessing based on new information what you think the stock or piece of real estate or any investment you have is worth. Everything's about the information at hand. One of the things that was said to me years ago when I became bearish on stocks, Paul, you're bearish now though, but in 2009, you were bullish. Yeah, because the information was different. 2009, stock prices versus values were like this. Later on, it became like this. When new information comes up, you have to change what you think the stock is worth. If you make assumptions on a stock based on a growth rate, and the stock comes, and all of a sudden the company is projecting higher growth rates for reasonable reasons, you've got to adjust your value. Lower growth rates, adjust your value. But one of the most common things we hear, guys, is I bought the stock at 50, it's now 40, should I sell it?
Yeah, absolutely.
That's a hard thing to do because you see your account losing value, right? Remember Michael Burry from The Big Short?
Of course.
One of the most common things said about him was Michael Burry kills it, but he usually loses 40 or 50% of your money on your stock before it skyrockets. This is a very common thing in value investing. People's perception, a value investor is not going to get the exact right price for the stock. You're never going to buy at the low and you're never going to sell at the high. So your goal is to be a disciplined person and take the noise out and say, okay, I bought the stock at 50, it's at 49, 40 right now. What am I wrong? Reassess. Go read on other websites like Seeking Alpha. Join our Discord community. Talk to other investors. Say, what are you reading about this? What am I missing? Guys, we have 4,500 people in our chat. I believe in Intel. Not everybody believes in Intel.
Yeah.
I was anti-Alibaba for a long time. Now I'm pro-Alibaba. The stock has fallen 60%.
Yes.
It all depends on the way you're looking at things, but you have your own method of valuing. Now, with our stocks, in our software, we have a stock analyzer tool. So I can look at a company like Intel and go out 10 years and put in my data for what I think the growth rates are, what I think the share changes are going to be, et cetera, to sit there and go, okay, I am going to assume different profits, different margins, and decide what I think I'm going to spend for Intel. So I'm putting these numbers in, and I'm going to decide, it's going to tell me very easily what the stock is worth to me. Low, middle, and high. So low price, 42, high price, 107. The stock is currently at $54. Okay, so I'm looking at this saying, okay, this is for 10 years from now. This is a present value of 10 years. So when it starts to get closer to 107 or somewhere up there, I'm gonna sit there and say, okay, by the way, I personally believe Intel is worth between $70 and $80 a share, which is right in between the middle and high level. Okay, when it starts to get closer to $70 or $80 a share, I'm gonna reassess. Actually, as it goes up, as news comes out, I'm gonna reassess. Is it still looking the way I thought it was gonna go? If the answer is yes, I might stick with it. If it's gotten better, I'm gonna adjust my numbers. If it's gotten worse, I will adjust my numbers as well. So this is all part of the process of looking at a company and determining what price you will pay. And then always keeping track of that price relative to the value you think it's worth. It's intrinsic value, as a value investor calls it.
Everything you're saying takes a lot of practice, Paul. And as a new person who might have just found this channel, I'm guessing if you're watching, you might be in some of these high-flying hype stocks and you might not know why. And now that a lot of them are all down, Paul, that's when we find these people.
If you don't have a process,
they don't. So
then you're not going to know when to buy or sell. And that's when you're going to be in the worst situation possible.
Well, I think a lot of people are in that.
If you like trading with charts or momentum, there are processes that work for charts and momentum. Mo has those. There are tons of people in his Bid and Ask Nation who make thousands of dollars a month just trading. There are people who've actually said, I don't have to work anymore just by making this. It all depends on a process. If you have no process, you will end up getting hurt very badly.
For those who don't, Paul, I mean, would you suggest a complete restart, getting out of some of these high-flying companies?
One of the most common things we have is a lot of people join our Patreon and go, oh my God, I have these high-flying companies. What should I do? I say, value them. If they're not worth what you're into them for, sell them. Everybody hates taking a loss, but sometimes taking a loss is better than taking a bigger loss later. If you had no process, it's scarier. I look at Intel. Intel's at $53 a share. I'm upset it's not $40 a share right now.
Mm-hmm.
I want it to be 40. I want it to be 35. I want it to be all these numbers so I can go buy it at lower prices. Guys, look at this. Everybody says Intel sucks. All right, let's go to negative growth and no growth on the high side. I saw Intel $53. I have it worth between 32 and 80. I mean, this is incredible to me. I look at Intel going, I think this is a company that can do very well. But there's a lot of negative news out there about AMD. So it's about being structured and saying, what do I really believe about the company? And following that process. Mo, why don't you show us in the charts how you sell stocks?
So I'm going to show you from a long-term perspective and a short-term. So this is a long-term chart, and I actually blocked this out because it doesn't matter. It's the pattern that we're looking at. This is a stock that moved through the sweet spot. Now, this is this little snapback channel that I want to show you. The stock price got to $336 and it dropped to $300. But the thing that you notice is the trend was still perfectly fine. You were in the overbought area, going sideways, just like you're taught to do, stay in them. You can take profits, but you don't need to get out. A lot of traders will exit here when they see their stock, because it's like Paul said, it sucks when you see your price falling, but you're supposed to trust your trend. If you would have trusted your trend and stayed in this thing, right now, this is Facebook actually, but it's $375 a share it peaked at. And when do you exit? Most importantly, right when that red line rolls into the sweet spot, going negative, you're under 80%, that's when you exit. It's just as easy as that. As soon as that line drops below 80%, that's when you're exiting. Now, short term, swing trading. It's the same thing. You're following your stock through the sweet spot. Once you start hitting resistance points and you roll below 80%, that's when you exit. It's very simple. As long as you stick to the process, like Paul said 1,000 times. As soon as you cross below 80%, that's when you're exiting your positions.
What's not simple is really being disciplined enough to not poop your pants when things are going
That's
well.
the hard part about investing.
Seeing your investment drop $40 in a matter of 5 days.
That's 10%. That's 11%.
Yeah, it sucks. But if you just trust your trend, nobody trusts their trend. All they do is look at the dollars coming in and out. And if you just trust your trend, it works every time it's tried.
And guys, you don't need a complex. It's just funny. I'm reading a book right now about Bernie Madoff called Madoff Speaks, where this guy actually interviewed Madoff, and his main goal was to explain his trading strategy as complicated as possible because it was less likely to be criticized. Good trading and good investing strategies are very simple. I love Gary Mashuris, my quote-unquote value investing mentor. I think his is too complicated. I think he's way too now granted, he crushes the market. But for me, I like to keep it very simple. I pick 3 or 4 attributes that matter to me in a group of stocks, and I buy 30 or 40 of this group that fits this criteria, and I move with it. In fact, we're going to do back testing soon on our 8 pillars. I can say with confidence that our 8 pillars probably beat the market over long periods of time. Because anytime you do anything value approached, you're probably going to beat the market. If you follow what Mo explained there was very simple. Most important part is to pick simple rules that you follow and follow them to the T. In one of our videos about the complete turtle trader, the best turtle was the one that followed the rules to the T. When the other ones deviated based on their emotions, their returns lagged. That's it, because when they're picking out their strategy and backtesting it, there's no emotion in the backtest. So don't fight the emotion there. Always stick to your rules. Whatever rule says to sell or buy, you stick to it and you do it no matter what.
If you need assistance in sticking to these rules, you can join our Patreon below. And then when we move off the Patreon, you can join us at everythingmoney.com. You can have access to Paul, to Trader Mo. On a daily basis, Mo makes videos about the updates and employed trader series. For those of you looking to get into this who have jobs and kids and you're very busy, we can guide you along this way. We are not here to give you fish. Paul, I see other YouTubers and they just keep saying they really champion, like, I was predicting this and this happened in terms of stock prices. Folks, you have a very long life ahead of you, and we want you to make disciplined, concentrated decisions over a lifetime, Paul. Not 5 days.
No, I get people who send me messages going, Paul, thank you so much. Yesterday, I got a text from somebody, Paul, thank you so much. I sold my Southwest stock. I'm like, don't thank me. Thank me over long periods of time. I will be wrong on some investments. Thank me when 30 or 40 investments overall beat the market. When you find a process that works for you and allows you to beat the markets over long periods of time. That's what matters. I will say I'm right on some things, like we talk about with Nikola and Workhorse. Like, guys, these make no sense. I have no problem taking that credit. But when it comes to actual returns, long periods of time, good process, you will beat the market. It's a lot easier to beat the market than people let on. The hard part is the emotional side of it. That's what makes investing difficult. That's what makes beating the market difficult. Because then our emotions and our brain get involved, and all of a sudden we make mistakes.
That's our take. Good luck out there. Join the Patreon. Paul will coddle you all the way, especially when we're down. We look to you, Paul, for guidance.
I'll pet you.
Fondle the thumbs up as Paul fondles his. See you soon, guys. Thanks for watching. Love you.